For many people, spending time on their home deck has allowed them to social distance and make the pandemic bearable. And that has been a boon for the decking supplier Azek, which just reported a 22.4% jump in sales year over year. Here to talk about it and the outlook for his business is Azek CEO Jesse Singh. Jesse, good to see you again. Now, just for folks who aren't familiar, besides the decks, you also design and make outdoor living products like shingles and railings and such. Tell me where most of the momentum is coming from for your business right now.
Well, certainly. Thanks again for having me on. So as we look at our business, a lot of the momentum right now is coming from repair and remodel. And as you think about the dynamics that have been occurring, not only with people wanting to spend more time outdoors, but with people investing in their houses and forming new houses, either new construction or moving into new houses. We've seen a lot of momentum in those sectors, and that applies to our exteriors business, which does exterior trim, but also our outdoor living business, which is really our deck and rail products. So we saw really good momentum in both those segments, and we guided continuing momentum for the near term and actually for the whole year.
What's happening, though, in the commercial space right now? I know your residential segment's off the charts, up 30%. Is that enough, I guess it is, to offset the decline you're seeing in the commercial side of things? And is there any sign that that's starting to come back yet?
Yeah, our commercial business, which is a terrific business in the segments that it plays in, which is interior repair and remodel with bathroom partitions and selling into general OEMs. That particular business was about 12% of our sales last quarter and significantly less on the EBITDA. So it's a smaller part of our business. It does reflect the broader economy, and we see strength in that business. We see stability in some of the interior side of that business, interior repair and remodel, some strengthening in things like marine and outdoor furniture. But we also continue to see weakness in things like trade shows and retail. And so I think that's just reflective of the broader economy. We would expect that to stabilize as the broader economy stabilizes and then return to growth sometime next year.
Now, Azek, I know, has made a big commitment to ESG, to recycling. You've said that recycled materials will account for 55% of production next year, up from 45% last year. So what do you expect that to do for your profit margins?
Well, we had in that transition, which actually occurred over the last 12 months from 44 to as you mentioned, mid 50s, we were able to drive 110 basis points of EBITDA margin expansion. We were able to offset both public company costs and COVID costs. And so as we look moving forward, we guided for 2021 of 10 to 14% growth and a higher level of EBITDA growth on that. And so what that shift to recycling is allowing us to do is continue to expand our margins, and also, I think, as importantly, offset any short-term dynamics that are related to either COVID or any short-term inflationary aspects.
Jesse, talk to me about the supply chain. Are there any hiccups there in trying to get the raw materials for these products? Have you seen that, and do you anticipate seeing that in the coming weeks and months?
Well, one of the benefits of our largest raw material being recycle is that, unfortunately for the planet, there's a lot of garbage and a lot of recycled plastics that are recyclable plastics that are out there. So in terms of our supply chain, we are U.S. based predominantly in our manufacturing. The vast majority of it is in the U.S. We source in the U.S., we manufacture and we ship primarily in North America. So because of that, despite some of the dynamics, that you may have highlighted, we're in a really good position from a supply chain standpoint, and we continue to invest in expanding capacity. We're a manufacturer that's investing in the U.S. We announced a $180 million capital investment to expand our capacity, primarily in the Midwest and the western part of the U.S. And so that will allow us to continue to meet demands as we see ongoing growth for our customers.
Working my way through the earnings report, which was very strong, I did notice that your net loss widened in the quarter to 64.4 million. Why did that happen? And do you see things improving in this quarter and in subsequent quarters?
Yeah, so when you look at on a GAAP basis, that particular number includes some non-cash elements that relate to the IPO conversion. So we had over $100 million charge as we converted private equity in the company to public equity in the company, and so that was just a one-time charge that is a natural part of becoming a public company. So as we move forward. We've lapped those sort of costs. We'll have a little bit of a tail there, but we should expect to move, to GAAP profitability in the future as we work our way through those costs. And I think, as importantly, we've maintained and continue to maintain very high profitability relative to our EBITDA margins, and those continue to expand.
All right, Jesse Singh, Azek CEO, good to see you. Thanks for making time.
Really great to be on. Thanks again.